We're seeing a little pop to the dollar today, but 7 weeks of declines. Does any of this week's data matter to the dollar direction?
Yeah, the data, the underlying trends in the data are important not only to the U.S. dollar but to foreign currencies. So in addition to the U.S. data this week, we're going to see Eurozone GDP, CPI. These are factors that the European Central Bank is paying close attention to when deciding on monetary policy moves.
And yet it seems like policy is all important. Did we get a change of any kind in U.S. policy last week?
Well, with respect to monetary policy, as we see as a key influence driving currency trends, U.S. monetary policy has been on a steady course of normalization or tightening. What has been changing in recent quarters and since last year is that other foreign central banks are now essentially catching up or moving in the direction towards catching up to Federal Reserve monetary policy normalization, and that's really helping to support the foreign currencies and contributing to broad U.S. dollar weakness.
So I don't necessarily mean monetary policy. I more mean sort of commentary out of Washington, D.C.
Yeah, so the commentary did add to fluctuation in the U.S. dollar. Indeed, the comments by the U.S. Treasury Secretary added to that already bearish sentiment that we've seen in the dollar. And then, some of those comments were, again, a little more balanced afterwards, trying to clarify those comments, and then the president reinforcing, strong dollar sentiment. So generally, we don't place a lot of emphasis on those day-to-day comments. We tend to look more at the underlying economic trends and monetary policy movements as the overall drivers of currencies over the medium term.
Eric, how are we to view the euro? Today we've had conflicting comments. We've had Klaas Knot, the Dutch central bank head, suggest that we need to get on with ending QE, whereas Peter Prate, the chief economist, says, let's take our time. Who's going to win this debate, the hawks or the doves?
Well, this is a discussion that may go on for some time, but there has to be some sort of an agreement at least before September 2018, because that's when we know the current program of buying 30 billion euros per month comes to an end. So the question is, what's next after that? Are the purchases going to be done all together, or there's going to be a further trimming? So this is a discussion, again, that should continue over the coming weeks, months. But eventually, we do see the European Central Bank as moving in a less accommodative direction. We think that that QE could be done by the end of this year. We expect that the ECB could raise interest rates early next year. And when a central bank is moving towards these very accommodative monetary policy settings, going from negative interest rates to positive interest rates, we see that as having more of an influence on the currency and being more supportive for, say, the euro or some of these other foreign currencies, as opposed to the Fed raising interest rates, where it's already some ways along its monetary policy tightening cycle, and that having less of an influence in terms of U.S. dollar support.